What's up, guys? JJ Fade 23. I just want to make a quick video with my insane drawing skills here. Instead of going through a million chat examples, I'm just gonna draw with you. I see so many people try to catch the front side of moves because I don't know, it's sexy to be shorting a stock that's going straight up like this and trying to catch the top, getting stopped out, trying to catch the top, or not knowing exactly where your stop has to go, scaling in, and then you blow up. So I'm going to show you guys how I trade parabolics, day one gappers that have broken the pre-market high and are running. I never try to catch the top anymore because I want to have a I want to know exactly where my stop needs to go. Okay. So whether it's a parabolic running straight up or it's a day one gapper that gaps up big and then dips a little and then breaks the pre-market high and starts to run, I'm always doing the same thing. The stock is running, running. I've spotted a daily level on the daily chart that I like, an area, right? Whether it's pivots, up pivots, down pivots, it's an area that I'm interested in, right? So as the stock's going up into that level, what I would like to see is the highest volume of the day into that level. But now, guys, it's not still I'm not shorting on, sometimes I short if I get a big stuff or some kind of really obvious stuff candle up there. But for the most part, what I want to see is the stock have a deep enough pullback from that level, right? Where it maybe doesn't hold the last breakout level or doesn't hold the most recent support. Something bearish, right? So I don't want it to be like this. I don't want to see it go into that level, breakout right here, hit that level, pull back, hold the breakout level, push back up again, or something like that. I want to see it come into my daily level, and now have a big enough drop that it doesn't hold this recent breakout level or even breaks that most recent support. Now, all this volume down here that's flying, millions of shares or whatever, we get a big volume spike at the higher day, right? Now on this side, the volume starts to get lower. Now, potentially you have a trend break, right? Obviously, you broke trend. Now, most important part is that I want the volume to be on this backside bounce. Now I know exactly where my stop has to go, and I want the volume to be cut in half from what it was on this front side move here. Right? So if the front side was pushing 2 million shares or a million shares, I want this to only be 500,000 on this bounce. All right. And I want it to get at least halfway back from the top to where it bounced, minimum halfway. Higher the better. Right. On low volume, now I know I can short right here and I'm risking here. And that means I know exactly where my stop has to go. I'm in no danger of blowing up. And then I'm trying to get at least 2 to 3 out on the way down. But there's clues. Point is, guys, it's the volume you're paying attention to. The also the action of the stock. Did it did it just break out, pull back, hold the breakout level, and break out again? Did it break out, pull back, hold support? Was there no blow off volume at all? Did it even reach a good daily level? This can be a very profitable strategy on a day one or a parabolic without putting yourself at too much risk, right? Because the problem that happens if you're just shorting on the front side, shorting, you all of a sudden you're just in a bad position, right? Now you're like, oh shit, where was I going to stop out? Did I even plan my trade right? Did I even think of where I was going to put my stop? Now you're upside down, right? And then guess what happens? You cover into the first wash because you're afraid because you've been red for so long. This ain't a good way to trade. It's just not a good way to trade. You always want to know where you're risking off of. And if the stock has already showed you that risk point, that's even better. Yes, you can short on the front side saying, "Oh, I'm going to risk off this daily level that I have or something," right? But you really still don't know exactly where your stop has to go because guess what? Sometimes stocks stop a little below the daily level, sometimes they go a little over and then fail back below. So you're really still not that's not a great play, plan, right? If you know the daily levels hit and you see the stock go up, reject hard, boom, and now you start to get that volume decrease and you get a chance to get back close to this high, short that shit. Now you know exactly what you know. That's just the way you stay safe, the way you know your risk reward, and you're basically what you just did is you taken a very dangerous parabolic setup or a very dangerous gapper that's running over the pre-market high, and you just made it an actual strategy that is repeatable with proper risk reward that you can do over and over and over again without trying to do the on the front side. How can you do the same thing over and over and over again? You just really like your risk is always going to be different. You don't know if it's going to go over the daily level, under it. You're trying to cherry pick the top, or you're taking starter size and then you're trying to add. This is just a much safer way to do it, especially for newer traders where you just want to have a exact risk reward and you don't want to risk blowing up. Because I think a lot of traders they think instantly like, oh, I'm gonna miss it if I don't catch the top. Well, guess what? Who cares if you miss it? And another thing, guys, what I want to tell you, if you don't wait for the bounce, all right? If you plan on if the top's set and it comes down, if you don't wait for some people will take this and they'll say, oh, I'll take some size here, and then it bounces up, I'll take some size here. What you're doing here is making your risk very wide. So even if the trade works, right, you might only get 1 or 2 R. If you wait for at least halfway up, yes, you won't take as many trades on the ones that don't bounce as high, but the risk reward you get on the ones that do bounce really close, at least 50% up, will give you more R return than if you always take it too early on the bounce and you have this wide ass stop and you only get 1 or 1.5 Rs. If you wait for at least 50% of that move bounce back, your risk becomes smaller, so the reward becomes bigger. I guess I can't draw as good as I thought, but I hope that makes sense. I mean, it's just yeah, it's just a safe way to trade a backside bounce. And, there's other tools you can use to measure the bounce but really just want to make sure the volume's starting to look like this, right? Front side, and then it's starting to be like on the bounce, I like to use a good 50% reduction on this bounce. And also things like I said, I don't want this bounce to be coming from a perfect breakout level that never even did anything bearish. All it did was break out, pull back, retest the breakout, and go again, right? And preferably the biggest volume spike of the day at the highs into a daily level. So, most important things: biggest volume spike at the highs into a daily level or near a daily level, pulls back, breaks at least one level of support, preferably a big bearish engulfing candle that breaks, doesn't hold the breakout level and falls below. Now the volume starts to decrease. Longs start to think, that thing's probably topped out. That was a big rejection. So they're getting out on any little bounce, and more short sellers are coming in because they feel confident and then taking it down and not having a risk about blowing up short in the front side of a move. Um, Trying to think if there's anything else I can add to that. I think that's pretty much it. So it's a pretty simple strategy that can keep you safe and gives pretty good trades a lot of the times. Like I said, this is what I do when it's not a day one gap and crap or a day one stock that just pops and starts dumping right at the open. If it's a parabolic midday or a gapper that broke the pre-market high and now is running, this is the only way that I'll trade it. So, yeah, I'm not a financial advisor, you guys. I'm just a knucklehead with a computer. Thank you.